A lot of investors I partner with have one major challenge. They are busy professionals that love to create memories with their families, but are too busy to actively look and find value-add real estate that cash flows. Hey guys, I'm John Fortes, and I want to partner with you. I provide investment opportunities through apartment syndications that allow my partners to invest passively so they don't have to worry about trading more time for money. If you are interested in creating passive streams of income, wealth creation, and all the tax benefits that come along with investing through real estate, I encourage you to fill out the form at www.investwithfortes.com. Invest today so that tomorrow you can trade money for time. Once again, that's www.investwithfortes.com. And I can't wait to partner with you.
Are you a busy professional looking to diversify your portfolio? Ever wanted to passively invest in real estate but don't know where to start? John Fortes provides you with a guide to passively invest in real estate. This is the Passive Investor Show.
And now, the Passive Investor Show. Here's your host, John Fortes.
Hello, PI listeners. Thank you for lending me your time today. Welcome to the Passive Investor Show. I'm John Fortes. Our goal is to provide you, the busy professional, with passive investing tips and tricks for your real estate investments to leverage more time for you to focus on your true passions. Let's get to work. Hello, PI listeners. Today I am with Brian Briscoe. Brian, I'm grateful to have you here. As you know on this show, it's TLDR. And what that means, if you don't know, is too long didn't read. Tell me a little bit about yourself, buddy.
All right. Hey, so first of all, I think easiest way is, right now I'm an active duty Marine. Been on active duty for 18 and a half years. I grew up in just north of Salt Lake City, Utah. Average life for a Salt Lake City kid. Spent a couple of years at the University of Utah. Wanted to be a college professor. I took a little break from school to serve a mission for my church. Went back to school, and for me, it was math. I was a math nerd, to be honest with you. Wanted to be a college professor, so I got a bachelor's degree, got a master's degree, and at some point in my studies, I kind of realized that, I looked at all the professors and I thought, if I keep on doing what I'm doing, I'm going to end up like them. And that scared me, math professors aren't known to be, well-rounded individuals. They were kind of socially awkward. And so I started looking for something to broaden, my become more well-rounded, basically. I landed on the Marine Corps Reserves, so I got in the reserves, this was 2000, went to boot camp, and, everything was hunky-dory. Moved to Minneapolis, Minnesota, graduate student at the University of Minnesota, and the World Trade Center goes down, So, here I am, Marine Reservist, and I'm thinking, well, I'll just pause my studies for a little bit, go active duty in the Marine Corps. So, I did that, just shortly after September 11th, and, now 18 years later, still on active duty, kind of knocking on the door of retirement. But somewhere in my active duty career, I picked up, I know this is going to be cliche, but I picked up, Rich Dad Poor Dad and read it. And I started thinking, I'm going to move every 2 to 3 years as long as I'm active duty. I may as well start picking up single family houses. And so that's what we did. We bought, bought our first house in 2007 before the crash. Ended up cash flowing on that one the whole time. So, the fact that the value that took a nosedive wasn't a problem. Bought our second house in San Diego, a year after the crash. So, I felt we got a really good deal on that one. And just kept on going like that. anyway, about 2 years ago, I started realizing that the pace we were going with single family wasn't going to, make a huge difference in our lifestyle ever. And so I started thinking about ways to ramp it up, and I found a book on multifamily, read it. I thought, that's a good idea. I want to learn more. So found a couple more books on multifamily, read those, started getting into podcasts. Michael Blanc and Rod Khleif were probably the two that, were most frequently on my listen list as far as podcasts go. And about a year and a half ago, I signed up for Michael Blanc's, internet-based course. Saw it, liked it. Right around the same time, I moved out to the DC area, and of course, Michael Blanc he's probably about 30 miles away from me right now. So he had an event, right after I moved here. I'm like, yeah, I'll just go to his event. Went to his event, liked what I saw, and, ended up, signing up for his coaching program. And through his program, I met a lot of really good people, and for people listening, that's where John and I met. I think our first Zoom call was, about a year ago. We met through Slack, and, somebody said, hey, let's all get on a call. Met my partners with Four Oaks Capital. Ended up finding a couple of deals, so to date, we've closed on, 55 units in Spartanburg, South Carolina. And actually just yesterday, we closed on another 33 unit building in Columbia, South Carolina. So that's where we're at today. Long time getting here, but, we just started.
That is awesome. One, thank you for serving. That means a lot to me.
Thanks, appreciate it.
That you dedicated your time to serve. So I appreciate you. Another thing too that jumps out at me is you explained all of that in the course of 2 to 3 minutes, right? But it really didn't take 2 to 3 minutes. I know that there's some ramp up time to all of that. And I think that's important to display to everybody, because you're really going about it and doing, and you and Four Oaks are being successful. I love your group, and you guys are phenomenal. So walk us through from the time you joined to what you decided to get educated on immediately, how you found your partners, and how you guys complement each other.
Yeah. Okay. So, I said before joining up with the Michael Blanc program, I was deployed for about 7 months with not a whole lot of time. Not a whole lot of time where I was actually busy with a lot of time on my hands. And so I probably read 100 books on different, real estate investing strategies. And then I spent, another year. I knew I was going to move somewhere. I didn't know where I was going to move. I spent another year, listening to 2 or 3 podcasts a day, on the way to work, at the gym, on the way home from work. It was podcast. So a lot of the education came through that, and then got into Michael Blanc's program. And, I realized I'm working at the Pentagon, which, there's a lot of hours involved, but there's also I commute every day. I take the metro system. So, I get on a train, and for an hour and 15 minutes a day, I'm sitting on a train. So, I loaded all Michael Blanc's, courseware on my iPad, and I spent, basically 2 hours a day looking at my iPad screen on a train to and from work, because that was the best time that I had to do stuff. And when I started analyzing deals, I would do the same thing. I would load it onto my iPad. I'd get the offering memorandum. I'd get the T12, all the investor, the information from the owners, all the financials. And I would basically, with a notebook and an iPad, do all the deal analysis, to and from work. That's the time that I had. And the other thing, we have a fair amount of, vacation time. We call it leave, but a fair amount of leave given to us. And, I'd just pepper in a couple of leave days here and there to do everything else. So since I decided to pursue this, I've probably taken, 30 days off of my normal job, and, we haven't vacationed a whole lot. It's all been, I'm taking a day off on Thursday so I can do X, Y, and Z, related to multifamily. Anyway, about January, February last year, I linked up with Eric Shirley through Michael Blanc's, Dealmaker Mastermind is what it's called. And we talked several times. It was just very casual. He was from South Carolina. My wife's from South Carolina. They didn't know each other, but they grew up a couple miles away from each other. So started building a relationship with them. And then one day we found out that we were working on the same deal. We were underwriting the same deal. I was ready to put an offer in. He was ready to put an offer in. And I remember texting him and saying, hey, we're competing on this one. I didn't know if you realized that. And, we talked to each other on the phone for about 20 minutes that day. At the end of the phone call, we decided to partner up on one single deal. It wasn't let's form a company together. It's let's partner on one deal. So we decided to partner on that one, kind of split the load, started talking to each other a lot more frequently. And that one got away from us. We couldn't offer a price that made the owner bite. So, a couple months go by, or a couple weeks go by, didn't talk to him. And I found something else. He found something else. And we ended up talking to each other again. So we said, okay, we'll look at both of these deals and let's try to partner on these. Once again, none of those panned out, but eventually we got to the point where we said, anything in the Carolinas, that was the area where we were both looking at the time. Anything in the Carolinas, let's partner on. All right. So shortly after that, we got the Spartanburg deal under contract. Eric was already partnered with one of his really good friends, Brian Mallon. And we started looking at who else we needed to get the deal across the finish line. And Eric suggests Todd Butler. He's like, hey, I met Todd Butler through, Michael Blanc's, Dealmaker Mastermind. He wanted to invest with us on a previous deal that didn't pan out. Let's set up a call with him. So set up a call. And Todd is also an absolutely amazing individual. He came in as a KP, asked if he could raise for us. Of course, we're not going to say no to that. And just did an absolute phenomenal job with it. So at the end of the day, we all partnered on one deal to get one deal across the finish line. And as we started working together, we realized very quickly that, our strengths didn't line up, which is actually the great thing. We all had strengths in different areas, which meant that, we each focus on a certain part of a deal. And, we were able to basically divide and conquer up along our lines of strength. So, and since then, we've closed on 3 apartments, and we have one more under contract, another 80 units that we should be closing on probably February timeframe.
That is awesome. It just reinforces the power of joining a community of like-minded individuals, constantly working and not kind of losing focus on what you're looking for. Because we see a lot of people come and go.
Yeah.
Come and get silent. So
yeah, flash in the pan. I mean, they're super active up front, and then 3 weeks later, it's like you never see them again.
Yeah, it's the excitement in the beginning, and then it fizzles out. You saw
Yeah.
you kept going, and Eric kept going, which is how we all kind of met too, right? So we were all the most active at that time, and it's just a beautiful thing to see how you guys came together and just take down these deals. Now, from what I understand, the 80 units going to be probably the last small unit going forward, right?
That's the hope. I mean, the 32 unit wasn't supposed to happen. We before we got under contract with the 32, we said, hey, we're going to go big from here on out. And quite frankly, when I got the 32 in my inbox, I sent it to Eric, and I said, hey, Eric, check this out next time you're in Columbia. And the whole purpose of sending him that deal was so we could get to know the broker. It was from a national brokerage, Marcus and Millichap. And I'm like, hey, Eric, I don't think this 32 units even worth looking at, but let's get to know this broker and establish a relationship. And, he came back to me, he's like, this is a little diamond in the rough, check this out, and looked over the numbers, and I was like, this can't be right. I mean, so we ended up getting, an asset that's worth about $1 million under contract for, $760,000. The after repair value already appraised is at 1.4, and we need about 350,000 to get it there is the answer. So, it was just too good to pass up. But yeah, from here on out, I think we're looking to, get some economies of scale that really you don't start seeing in multifamily until you're above the 100 unit mark. Especially in the Carolinas where the rents are a little lower than they are, say, in DC where I'm at right now. So, yeah, from here on out, I think we're gonna focus exclusively on the 100 and up club, and just take it from there.
And you built rapport with the brokers, which is important. And now they're gonna, take you seriously when you go forward. But let's pivot real quick on what you guys are doing and how it's benefiting your investors that are investing in these deals with you guys. So What's been the biggest thing you've come to find out that your investors are really excited about?
Everyone's excited about something slightly different. Some of them get really, really excited when you're talking about the back end, the ability to force appreciation. On our Spartanburg deal, we're in an area that's, I think is going to appreciate really fast. I think the rent growth there, it's already faster than national average. I think it's going to continue to grow at a very steady pace and, well above the national average. So there's some passive investors that are very excited about the potential upside on that one. We're with our renovated units, we're already, above what we forecasted on our market rents. So, in that case, it's just the, 3 to 5 year or 5 to 8 year time frame turning, $50,000 or $100,000 into twice that. On the Columbia deal we got, it's a very different structure. We ended up doing a debt raise, where we're writing notes. And I think most of the people that are on that deal were just excited about the cash flow that we were offering. I mean, we're giving a 10 pref, plus cash flow. And, different investors have different goals and different mindsets. I think each one of these deals we've done so far kind of plays to a different type of investor. So on the Columbia deal that we closed on yesterday, we're estimating, we're giving a 10% return, preferred return. So, after all the bills are paid, the investors get the first 10%, and then we're giving 50% cash flow after that. So for the investors, it's a quick return on their money. It's a 2 to 3 year deal. So they park their money for 2 to 3 years. If they put $100,000 in, we're going to turn that $100,000 into 145, 150 in 2 to 3 years. So I think the biggest thing people are excited about is just the growth that they're going to get. The rate of return is not something you can get consistently in the stock market. So anyway, that's my take on it. Sorry, very long answer for a very short question. But growth.
No, that's awesome. That's awesome. So let's talk about downside protection. How are you guys protecting the asset with the investors? Because if I'm an investor, let's just play this out, right?
Yep.
I'm an investor and you have an offering. I want to know about your downside protection. So are you getting long-term debt? Are you having adequate reserves? Mm-hmm. And are you buying for cash flow? And I know the answer to all that, but how are you guys implementing those systems into your processes?
Yeah, so whatever our investment term is, we're making sure that our loan term is going to cover that and a lot more. So on the Spartanburg deal, we advertised 5-year hold. We got a 12-year loan. And we kind of told our investors if 5 years from now the economy is not great to sell, we're able to hold on to that for quite a while. The one we just closed on, we're advertising a 2 to 3 year return of capital and a sale, getting our investors out of it. our loan's going to be good for 10 years, so, so as far as debt, we're going to have stable payments for a long period of time, so interest rates go up, go down. It doesn't matter because we're at a fixed rate on both of those. We're also very well insured. We're working with the same insurance company on all three assets that we have. Another thing that the reserves, so we have different a different way of taking the reserves on both these properties. So one property we just did, we're doing, 1 month's income, worth of reserves, which is a fair amount of money. On the property we closed on yesterday, there's 13 out of 33 units that are vacant. So we actually have almost a full year's worth of expenses in the bank right now. We closed yesterday. We have that money in the bank. So in addition to our capital expenses, we've got a $72,000, reserve buffer there because of the high vacancy rate. So if there's delays to us operating, delays to renovations, delays to anything else, we can still pay all of our bills for 12 months, before we have any problems. So, it is something we take seriously. Legally, we're also doing the right thing, private placement memorandum, so they have something legally that they can back up on. On the Four Seasons investment in Colombia, they actually have a note that they can take to, if we default or if we do something, we're not supposed to, they have something they can, take to the courts and say, hey, here's a note that says they owe us, 10% on the money invested for this long. So it's something we're very cognizant of. We want to make sure that it is a safe investment for our investors, that there's nothing they're going to worry about as far as, am I going to get the return on investment? Am I going to get, what they advertised?
That's awesome, man. Thank you for sharing that. And I'm sure with all of that, there's other components as well as break-even occupancy. So you already know where you stand to break even on that project. And I love that. And we won't dive into that. But let's just go back real quick to the time focus and the energy that you've put in to build all this up. You got train rides, you got hours of commute, and you got what I like to call commute university, which is it could be in your car, it could be in the train, it could be any public transportation, on a plane. But you're getting your education in the forms of podcasts, you're getting education in the forms of online courses, and you're getting conferences, and you're showing up and meeting these people. And these people are really falling in love with you guys. I know I did, because you guys are friggin' awesome. Because of the work, and I can see it. I saw you from the beginning, and now I see you guys now, and it's like amazing, right? So iron sharpens iron, and it's all about who you keep yourself around. So it's also a benefit of time. You're putting in a lot of sweat equity in this from the beginning to get to where you are. So for someone that's looking to go from the passive side to the active side, I want you to paint the reality of the picture of the time focus it takes to learn all this as a process and a step to get there.
Yeah, I say before you look at the time focus, you've got to kind of look at your why. Why are you doing this? And I have a big burning why. I've been in the Marine Corps for 18 and a half years, and I've deployed a lot. They give you a ribbon every time you deploy. So every time you deploy past the first one, you get a star on it. I've got 6 stars on it. So I got 7 deployments under my belt and a lot of time away from my family. And, about a year and a half ago, I realized I was 3 years away from retirement, and I hadn't even thought about what to do after, so I started thinking about my why, is I don't want to deploy ever again. I don't want to leave my family again. I don't want to miss birthdays. I don't want to miss Christmases. And I realized that if I don't take action on that the alternative for me would be staying in the Marine Corps for another several years. Now, don't get me wrong, I love the Marine Corps, but, it's getting to be a little bit too hard for my family for me to be in the Marine Corps. So end of the day, you need to have that big burning why sitting inside you, because it's not easy. I probably, there were a couple of weeks early on where, my goal was, call 2 new brokers a day, and, once again, with the time that I had allotted, I didn't have a lot of time. So 2 brokers a day, during my lunch break, I usually go to the courtyard of the Pentagon, and make phone calls to brokers, cold call people. And then, when I get something, my personal goal was, respond to the broker on an offering within 48 hours. Was my goal. So, if I'm making 2 calls, that's 10 calls a week. Weekend brokers usually don't work on weekends, so 10 calls a week. And if they send me an offering memorandum, there's 48 hours where I have to review it, send them feedback. So there were some weeks where, I struck out on all my broker calls, but there were some weeks where I had 2 or 3 or 4, brokers say, hey, check this one out. There was just a lot of time put into it, and every time I got to the point of being overwhelmed, I just kind of sat down, took a deep breath and prioritized and said, okay, what's the most important thing for me to do now? What's the next couple of steps that I can take to get towards my goals? So, and that big burning why right in front of me every time was just like, hey, I need this to work. The alternative just doesn't work for me, so I need to make this work. So that pushed me through a lot of things. But I would estimate that, in addition to my normal employment, I've probably put in somewhere between, 20, 30, and sometimes 40 hours a week, trying to make this thing work.
Man, wow. You that's an amazing story, man. An amazing why too. I love it. So real quick, I wanted to touch on this because the passive investor going from LP to GP, it's you're going from a position of just watching your money to now creating a job. So what is your goal at the end of the day? And I love the fact that you said, what is your why? So I just wanted to put that in perspective as well.
Yeah. And there's definitely some advantages to being a passive investor first, because you see that, the sponsor investor communication firsthand, and if you ever get frustrated with how a sponsor is communicating with you, you can be like, all right, note to self, communicate better with investors. Now, on the flip side, if you've got somebody who communicates very well, you see what products they're sending out. You see what they're doing. And if they're sharing their information, you can learn a lot from that on how to operate a property. You'll already be familiar with a PPM. You'll be familiar with contracts. You'll be familiar with everything else that's involved in it. And in most cases, you can probably pick up the phone and call that sponsor, and in most investments, you have to have a pre-existing relationship with that sponsor anyway. So you can probably pick up the phone, call that sponsor and say, hey, I'm going out on my own. I want to do this. What do you think? And get some real solid advice. So, passively, if somebody's interested in actively investing and they've got the ability, I think passively investing is a great way to start. And it's going to give you a leg up on, people, like me who just made the jump from single family straight into this. I had to learn a lot of this stuff. The first time I saw a PPM was when I'm offering it to my investors. So, fortunately, the other guys in my team had already been through that part, and they were able to walk me through it. But I think it sets you up for success and it gives you credibility with brokers straight up.
I think that's awesome. I usually ask, give me one piece of advice to provide passive investors. And I think you just hit it right there. So I'm not even going to ask. So Brian, I really appreciate you coming on. I definitely want to hear more about you. We're going to bring you back because I think this conversation was just really natural. And it's because we get along so well, right?
Yeah. We've known each other for a year, and, I've made a note to myself, talk to John more. So, glad to be on. Yeah. So, yeah, you posted something on Slack the other day, you know, and it was like, hey, if anybody wants to set up a call with me, and I'm like, yeah, actually I do. So, you know, dug through the email, found the link, and here we are. So, yeah, we're going to talk more. You know, that's my New Year resolution. Talk to John more.
Oh man, that means the world.
I'm serious.
Man.
Serious, man. I'm going to make it a goal to talk to you a lot more. So, let's do it.
But Brian, for the PI listeners, where can we find you?
You know, best way is probably through my website or our website. You know, it's fouroakscapital.com, all spelled out. And my email address is Brian Briscoe at fouroakscapital.com. You know, all spelled out. So simple.
I love what you're doing. Everybody visit their website, Four Oaks Capital. They're amazing. Great group of guys. I can't speak any more highly about these guys. I really hold them in high regard. So, Brian, appreciate you and the team coming out and joining us on this podcast and providing the PI listeners something. Is there anything you want to provide or leave off?
You know, just thank you for all that you do. I know that you've built your name, you've built your business around adding value to other people. You know, you've added a lot of value to me and to our group as a whole. So, you know, the last thing I don't want to sign off on is just saying, hey, thank you, John. I appreciate you.
Thank you, guys. It means the world to me, and definitely, we definitely got to talk, man. So
all right,
I appreciate you for coming on, man.
All right. Thanks, John. Appreciate it.
All right, PI listeners, go and do what you got to do. Until next time. PI listeners, I'm grateful for your time, and I appreciate you for listening. For more information, go to passiveinvestorshow.com. If any of this resonates with you, please subscribe and leave a review. The more you know, the more we grow. Thank you for tuning in. Till next time.